Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. First thing we're looking at here is a chart of the market, the mini S&P 500 futures contract. This is our intraday perspective look at the market. These are intraday dynamics, our proprietary indicators. First thing we're noticing here is a bearish indication for today. We have bearish across the board, bearish, 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 bearish. This, of course, being Friday, the 20th of March, first day of spring. Tomorrow, of course, the first full day of spring. And we'll have some spring savings for you too on our portfolios and look at our portfolio returns, but we'll get to that in a second. Right now, again, we're below the trend. We are at the low of the session, although the market has essentially died. We are at the low of the session, below the trend, quadruple bearishness on this quadruple witching session. Looking back over the market, this is Friday, Thursday, Wednesday, Tuesday. That's, of course, the Fed day. Two-day meeting, Monday. Mentioned last Friday that the market had a bit of we were certainly bullish going into here. This was going into Friday. Look at this extreme bullishness, green, 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 green. Did suggest that the market would eventually make it higher, but there just really was a disconcerting of the efforts amongst our indicators. We're actually fully bearish right around here, so it really suggested the market would be choppy. It did manage to reclaim the bullishness here, triple threat bullish there. We did get a close near the upper echelon of the day's range. We saw a bit of fall through on Monday. But again, just nothing really to support the move. Negative divergence here, bearishness here, a little bit of bullishness there, bearishness actually there. So one would suggest that one would expect that this move actually wouldn't hold, given the disconnect amongst the indicators, and we did see an ultimate move lower to break back below the trend, retest, and close below the low of the early session and near the lows of the day. On the market, of course, as a result of the mixed indications underlying the market. We go into the next day, this, of course, being the obligatory drift higher into the Fed announcement, buying the news, buying the rumor, and buy, close actually above the high of the prior day. At the high of the session, full bearishness or bullishness was the case on Tuesday. Wednesday, we got a little bit of a choppiness there. Not really a congruency of our indicators, but definitely overall as we got into the midday, full bullishness was the case. Bam, we get the explosion higher. And really was quite impressive, actually. Didn't really get a sell-off. The market likes the move. We did get a bull trap on the following session. We generally don't like to put a discretionary discretionary outlook on the market until the post-open of the following session of the Fed day. That, of course, was right here. So where's the market? Well, it's above the trend, but we did have this double top, so obviously it's not really going to come to fruition. We look at our indicators, definitely not supporting any kind of a bullish move, considering this was just the case the prior day, the day prior. So where are we now? We're still at that kind of flux where we're just holding the line, and we're going to look at actually the daily chart of the market, which suggests to us why the market has essentially died after this move. But certainly bearish is the case. Bearish, bearish, bearish remains the case for Friday. We're below the trend. 775, we'll call it, is very strong support. It was the resistance right here. We blasted through it right there, retested it, and now we're just barely trying to hold it right there. So we'll see where that goes. We're going to go ahead and minimize this and look at the daily chart of the market. This, of course, is the cash market. And actually, we'll just look at that. Look at those beautiful winners in the Mini Russell Day Trader 1.0. This system, I believe it was Bill O'Neill's rule of the have 5 instruments at least. 2 will perform moderately well, 2 will perform maybe okay, not so much, and then 1 will just make your portfolio. Well, that's the case with the MapDT having the 6-year-old Russell Day Trader, one of our first 4 systems, still going strong, putting up gains of per contract nearly 15 points on the 17th, and the 18th coming in with a gain of almost 20 points on the Mini Russell contract. Yes, of course, we're day trading the Mini Russell. Beautiful winners was the case, and just had to take a look at that. That really buttressed our support of the MapDT. But now we're back to the daily chart of the market, and we're looking at the S&P cash. Of course, we're still 20% bullish. From a discretionary standpoint, from a trend following standpoint. However, we do remain 30 and 50% bearish overall. So generally a bearish bias we're looking at here, but most notably we're coming up against the very key and our very key, for our intents and purposes, measure of trend following support resistance coming in right at around, we'll call it 793, definitely certainly 800 from a round perspective, from a horizontal perspective. We're also looking at 800, so definitely a large amount of resistance coming in around 800, and that explains certainly the market was drawn like a magnet on the Fed announcement on Wednesday, and now we're just kind of retracing and treading water. The support certainly comes in around 760 on the cash market, so really getting squeezed here. 760, we may get a little bit of a fake out move below, or we may just continue to move below, but certainly a move above 800 will bring us back to full bullish from our official market timing perspective after jumping out of the bullish, the early and errant, I'll add, bullish indication from an official market timing perspective at a close of 789. So should we reclaim 800, we'll just get back in on the bullish side. But what most notably and remarkably was the profit-taking signal that we like to use, coming in at a price of 683.38, and of course we get a move of 100 points after booking or suggesting one book all short-term or short sold profits you have on the short side. So that's where the market is. So from a directional movement perspective, obviously you see full neutrality, short-term bullish from a momentum perspective, and amidst an intermediate term bearish indication, although this should read perhaps neutral to bearish. So where have our portfolios been? Well, the MAPDT, as we aforementioned MAPDT, certainly taking advantage of the huge moves in the Russell Day Trader 1.0, one of our oldest systems, still continuing to really put up the gains, actually takes the lead in all time frames with a gain of 63.28% in just the last 8 days. This last couple of days, the MAPDT gains 38.65. This was due in large part to, at least, well, of course, the Russell Day Trader 1.0, and the MAPDT gains 8.95 on the day, actually on yesterday. Most of our day traders actually haven't even traded today. Obviously, you can see the market is just essentially dead. So essentially a lot of our portfolios are flat today, but there's an impressive number. 63.28% over the last 8 days is the performance, the leading performance of our portfolios. In fact, one of our most diversified, the MAP Black, is of course still a very aggressive portfolio, hanging right in there at the number 2 spot at 35.93%. So definitely some interesting portfolios, interesting moves we have there. Forex, wow. This is our MAFX Lite portfolio, just a $10,000 extremely aggressive portfolio trading the Forex. This was a gain, I believe, on Wednesday, the Fed day. $9,553.75 was the gain on Wednesday for the MAFX Lite. Very impressive was the case. Here's a look over the last 9 trading days. There you see that 95.53. Yesterday it gained 2,500. A couple of small losses, actually 3. A few impressive gains were the case before that, leading to a total of 158.3% return over the last 9 days for the MAFX Lite. Very impressive was the case. And so if you're interested in subscribing to any of these, we actually still have the special where you can add any MAPDT, sorry about that, portfolio, and save $500 off any MAPDT. The original, there's 2 of them right there, so we'll go back here. The original, any MAPDT, essentially, you can actually save money. We're going to take $300 off the MFX Lite. No, $500 actually is the case. Subscribe right now for the MFX Lite for just $1,000. Just enter promo code VIDEO. We'll go ahead and add that to the lot. I don't know if we're going to be able to do this, but the dual day trader as well. Enter promo code DDTES, and that actually should be working. Not sure why it's not, but we'll fix that. $500 off any of those. We hope you've enjoyed it, and we will see you next time. You guys have a great trading week.